Welcome. I'm Nate Durako, along with Mark Talaski and Brian Basting. Thanks for joining us for the August USDA report recap. Corn closed down up 6.5. Beans down. New crop 16.5. Wheat 5 to 6 across the board. So, a couple interesting numbers today. Want to get into it. First, USDA survey-based yield results. They also noted that they were resurveying some of the acres, incorporating the FSA data. So Brian, given the USDA results on yield, acre changes, what did we see in the corn balance sheet today?
Well, interesting is a good comment, Nate, because what we saw was the USDA sliced off about 725,000 acres off harvested acres in corn from what they had here previously. So that's going to change the balance sheet, even though we had record yield forecast, 183.1 USDA came in at. So what you saw there, Nate, was it offset that a bit, and the production was barely above the average trade estimate, 15.147 billion bushel. So bottom line, the carry out for 24-25 came in at 2073 billion bushel. Last month was actually 2097, and the trade estimate was 2119. So when that initial dust settled, if you will, trade excited, needless to say, about 183 yield. When you take into account a smaller acreage number and some improving demand for 24-25,
right,
our carryout actually dropped a tad from what it was there in July. Now, 2 billion bushel is not running out of corn, but at these price levels, that was enough to encourage some short covering across the board in corn.
Yeah, well said. I think, and we've for a bit here been incorporating some reduction in the acres, kind of the Minnesota, Iowa, Southeast South Dakota rain impact, and have felt more optimistic the last couple of reports, the last couple of weeks on the yield potentials. We've seen some really good finishing weather, so they kind of accounted for both those and about an unchanged balance sheet. We'll get to the export demand here in a minute, but kind of similar outlook there, Mark, on what we see in the bean balance sheet today.
Interesting is probably the right word to use there too, because
bearish.
Yeah, it was quite a surprise. I mean, nearly 100 million bushel increase in the carryout. It's the largest we saw since the 1920. We had a 520 carryout, and I think 18-19 we were 900 and some change.
Yeah.
So obviously not that burdensome, but definitely a big uptick from what we've had been the last couple of years, and then like I said, 100 million higher than the trade estimate is kind of a surprise. So I think they did take crush up a touch. The biggest wild card continues to be on the soybean side, our exports or the lack thereof. We did have a flash sale this morning, which was kind of somewhat optimistic.
Couple in a row here, yeah.
And the trade was looking for that last week. Finally saw them Friday, I think, and then again this morning. So, it's probably the most bearish commodity today, and it sure showed it on the board.
Yeah.
So,
yeah, would be interesting to think if beans weren't down 16, 17, a little more than that at one point, if corn would have ran a little stronger the other way, which, like you noted, doesn't really seem like I wouldn't make a bullish argument on the corn balance sheet, but kind of within where the trade's been feeling on the acres and yield and maybe a little short covering. Mark, any big changes maybe on the global side? I think more of the emphasis, maybe I'll just answer that question a little bit, was we're still, as we look forward and get into harvest, and we're closer and closer now to realizing some of these crops, both corn and bean yield increases today. Beans to the tune of 1.2 bushel per acre, that 125 million bushel increase in ending stocks. 24-25 South America, so where Brazil, Argentina will plant this coming fall, winter, they've got bean production up, I think 18 million, 19 million metric ton, just shy of 700 million bushel. If realized, that could weigh pretty heavy if we're carrying 500 million bushels in. What's kind of the optimistic outlook for that? Is it maybe we pick up some export demand? Is it more of our crush build out? What do farmers looking at a price sub $10 today think about new crop beans?
I think you hit it. I think it's going to be our exports, hoping that we can kind of see a little bit of an uptick on that. We're obviously going to see increases in our crush going forward, and so more domestic demand's never a bad thing.
Right.
So it becomes a little more inelastic in sense versus exports. But again, that South American number is just a number today. It's still very much in the bag.
Got to be put into the ground first.
Yep. So I think Mother Nature may decide ultimately what that crop turns out to be, but it is a tough picture to look at here today with this board. I mean, how quickly we went, now chatting about maybe putting an 8 in front of beans for a cash price. So, it's not as pretty as it was, a month and a half ago,
right.
Really. So.
And we'll get into maybe a couple of the basis conversations here at the end, but it's going to be an interesting dynamic for both the warehouse and the producer this fall on what store versus sell decisions.
I might add one more thing. Mark did a terrific job of summarizing that, Nate. But now we're looking at I believe right around 980, 985 for November futures. I believe that's right around that 85% crop insurance price, the APH. That's the key point I want to emphasize to the viewers.
Great point.
That covers 85%, 981 of your APH. The downside risk is if these yields even grow from USDA or
right.
your farm yield is above your APH, that coverage continues. You don't get coverage until the market goes even lower. So just reminding your grower or your viewers that this is an environment you still want to manage price, because if these yields again surpass APH, you don't get an indemnity until a lower price. So again, we are at some low prices. It's not an attractive environment. Crop insurance certainly provides some safety net here, but if your yield is higher, that safety net goes to a lower price.
Something I think we noted last month in the report on the corn side a little bit. Just hey, some of these yields look like they're getting a little bit bigger, and sure enough, record yields, Mark. South Dakota, Nebraska, Iowa, Wisconsin, Illinois, Michigan, Indiana on corn. Maybe forgot one in the Mid-South or Delta, not to leave that out. Beans, record Missouri, Illinois, Indiana, Ohio. When you look at that geography, tributary to what we trade from the merchandising side, from the commercial side on the Illinois River delivery system, feels like a pretty burdensome supply potentially as we get ready for fall. Tributary to the Gulf export market. What are potential basis spread impacts from that?
Well, and those yields based on this current weather forecast could potentially even get bigger.
Sure.
And so it could become a bigger problem. But you combine that with the old crop stocks, and boy, it's a heavy lift right now to get through this crop year and then get into this, this new crop year starts in September. But I mean, a basis, I feel like until this crop's put away, it could definitely have a heavier feel for sure. I mean, right now there's already sort of a sense of that with some producers moving some on-farm stuff here to kind of clean out bins. Basis is kind of fading in some markets, trying to stay ahead of it, and I think we can see more of that here going forward.
Yeah.
So it's not a very optimistic picture, because there should be plenty, and if we don't have a strong export program on beans, that demand, that basis doesn't need to be strong. It kind of ripples into the cash markets, into the crush markets, into the domestic markets as well. So corn could be a little different. Could see a little stronger export program if there's lack of availability, if you will, of just available stocks, not necessarily stocks themselves.
Yeah.
Could firm the basis up a little sooner than later, but that's definitely heavy on the front end.
Yeah, and we've had our fall meeting outlook tour that we've done a couple stops at. We got one here in Bloomington this week, but I think it highlights from a commercial perspective just fall policies, and then producers are going to have to be aware that there may be changes to that storage and DP fees this fall and alternatives to help manage that risk. That doesn't give you any floor. So I think also something to be said about carry opportunities, like you said, once that crop gets put away, maybe what we could see in some basis, but at the same time, that's not necessarily a bullish flat price statement. So, putting something in the bin, making sure you've got some type of return on that, you've locked in some type of carry, but a lot of uncertainty as we get, especially in the second half of the marketing year. South American production, Ukraine final crop size, there could be some fireworks, so call strategies maybe to help protect some of that upside. Shifting to that export comment, increases in both the USDA on corn and beans. Beans pace year to date still a little concerning. Corn, we've been a little more optimistic for some time as of late here. USDA increased at 75 million bushels, 2-3 old crop, bumped 2-3 new crop, bumped old crop 25 million bushel to 2250. What type of changes did we see that we were hoping to see maybe in Argentina, Ukraine, EU crop production that confirmed that, or are we still a little maybe too optimistic on our corn export picture today?
No, I think you summarized that well, Nate. We've got a change in the new crop picture that's finally being realized. USDA took down Argentina to 50 million tons, and some people believe that's still too high at 50 million tons. Their harvest is wrapping up now, but domestically, some sources are as low as 46.5. Point being is that those bushels would compete directly with U.S. bushels in the export market. So 2 million tons lower in both production and exports. Today, also, USDA lowered Ukraine and Russia exports combined by just under 1 million tons.
Okay.
So between those two, 2.9 million tons lower than July. So as Mark said, we may have a little bit more hope, if you will, on the export side for corn. Obviously, we're going to have to keep an eye on sales here moving forward. But at least for the time being, there's less competition than we anticipated a month or two ago. So I think for the corn market, and Mark can address this much better than me, but in terms of marketing, the Gulf may have a stronger pull, as Mark did a terrific job talking about beans. China isn't buying hardly any new crop beans. They're finally stepping in the market now, getting some coverage before the report. But I think the corn market, with a change, a smaller crop in Argentina, smaller crops in the Black Sea, we've got at least, and the attractive price, obviously, to an overseas buyer.
Yep.
Mexico, for example, has been a big buyer. All those things together are supportive of at least a decent start, if not a strong start, to the export program for corn.
Well, we're hopeful for it. We kind of need that today, so we don't want to price ourselves out too quickly here. If we
What I think is interesting on the corn picture, I mean, here you got a 183 yield and carryouts flat.
Yeah.
Yeah.
Well, and you know, optimistic of the export picture, but
Yeah.
hopefully we see that follow through, right?
Yeah.
USDA didn't. I think one point to comment on that new crop picture is they didn't make much of an adjustment to the Ukraine production outlook. They did drop it,
No,
I think,
they
to
didn't.
500,000 metric ton. They're still over 27, and I think some
No,
of the
they
trades in that 24.
Yeah.
So I was asking a coworker, you know, what do you think the takeaway there is? And he said, well, there's probably not much survey going on right now in Ukraine. It's probably satellite imagery. I think our research, Brian, you, Larry, would probably say we'd want to see that come down a little bit. We may have to see that come down a little bit more to realize our upside in our corn export picture. That's fair to say.
It is. I think you're right, though, Nate, that the private estimates for Ukraine are lower than what USDA did today.
Yeah.
So I think as you go forward, again, you look at competitor supplies is always a critical aspect of U.S. corn exports. The strength of the dollar is a factor, flat price is a factor, but it's the volume of competition that we look at is historically the strongest factor that will influence our exports. And the Brazilian crop is smaller than last year.
Yep.
But it's still big, but it's smaller than last year. The Ukraine crop, as you said, probably is going to come down from where it is today. I think there's still room to come down in Argentina. So we got to take it one day at a time here, but USDA historically is conservative in their reductions, particularly in overseas supplies. So we might see another reduction in September.
Okay. Brian, sticking with you here, just a couple highlights maybe on the wheat balance sheet, what we saw changes there, or anything internationally that stands out?
The biggest surprise today in wheat, Nate, was the hard red spring estimate here in the U.S. relative to trade expectations. I know you and your group did a great job here with a survey here a couple weeks ago, found some really great looking wheat up in North Dakota. What we found, the USDA threw us a bit of a curveball today. They took 200,000 acres off North Dakota's harvested acreage, and they took 320,000 acres off Minnesota. So basically 500,000 acres, and a small amount from South Dakota too. So over 500,000 acres. So that hard red spring production number came in below expectations.
Yeah.
So that was a surprise. Did support Minneapolis, particularly in relation to Chicago and Kansas City. I don't have a lot of friendly news for Chicago and Kansas City. They actually increased the Ukrainian export figure for wheat. In contrast to corn, they increased Ukrainian exports of wheat relative to last month. And they also took the Australian crop up 1 million tons from last month. The 30 million tons took the Australian crop up, exports up 1 million. The one wild card I'd say in wheat, a little bit surprising, Nate, is that there's a bad drought going on in Argentina, and they didn't touch Argentina. So they're being conservative, but if it doesn't get some timely rain starting here pretty soon in Argentina, that's a number to keep an eye on. But for today, supportive for spring wheat because of the acreage reduction. Still looking at some tremendous yields,
Yeah.
as you folks know firsthand from what you saw. Not downgrading the yield potential, but 500,000 acres is a lot
Yeah.
in terms of acreage. And so a little bit supportive of Minneapolis, but the only thing I can say on winter wheat is they did take European wheat production down 2 million tons, but they only took their exports down 500,000 tons. So for the moment, USDA believes that EU is still going to be a strong competitor in 24-25. So it's hard to get bullish wheat exports unless something happens now in Southern Hemisphere, if you take those numbers at face value.
Sure.
With larger Black Sea output in Ukraine. Russia's down, but I would say that we need to see some late season problems. We'll see if late season problems develop in Australia. They look pretty good right now, but Argentina is the wild card to keep an eye on.
You mentioned, Brian, in the past that the August report, typically they don't do much with
You're
the
right.
Southern Hemisphere as far as production, so maybe that's just what they're doing. They're just kicking the ball down the road, if you will.
Yeah,
Still
great,
pretty
great point,
comfortable
Mark.
balance sheets, though. I mean,
Yeah.
Still
we've
pretty
got some
comfortable.
decent export numbers penciled in for each class that we got to hit, or we're still growing year-over-year stocks to use pretty
Right.
significantly.
If we fast forward 3 weeks, I think, and it's still as dry as it's been, it feels like they're going to make some
Argentina especially.
Argentina
Yeah.
reductions.
And the Australia crop isn't in the bin. It's just WA in the west looks really good,
Right.
and they're getting a bit more rain in the east. So for the moment, if I see USDA took it up 1 million tons, they're confident for the moment that they've got a pretty good crop coming on. But like Mark said, USDA is pretty historically conservative, particularly on Argentina being a later developing crop relative to Australia. So, but in a nutshell, Mark summarized it well, Nate. We've got enough wheat worldwide, and that's obviously we're looking at some multi-year lows here.
Kind of what the market's telling us today.
Exactly.
Last question, just kind of circle back to the domestic market. Big crop getting bigger feels like, maybe still some adjustments in the acres versus what we saw FSA, but I think accounting for a lot of that today. Pretty hefty demand in the balance sheets we've got penciled in. We're hopeful for, but as we kind of transition into new crop and producers start combines rolling and maybe some are realizing record yields, just reference, and it's not trying to beat up producer or whatever. We've seen this last year. We just know that we were tighter holders of grain than we've seen in maybe historically. Producer was slow to market a lot of grain this year. As we start to transition into new crop, I've heard some comments on some sub $3 cash being thrown in the towel here on old crop. What is maybe an alternative strategy that a producer could look at, Mark, this fall to maybe putting it on that storage or DP and just kind of
Yeah.
hoping for upside?
Well, you mentioned earlier, a lot of people are going to consider higher rates this year because of the cost
Gotta
of
look at it
storage
close,
and,
yeah.
and the balance sheet and the challenges of carrying this crop. So inevitably, I think we're going to see higher rates, especially in those short space areas
Yeah.
that we had in the past. Maybe not so much in some of the western states, but some of your central and eastern states are for sure going to see high rates at a minimum, what we saw a year ago. And basis contracts, unfortunately, are not really long-term marketing plans. They're really good short-term, buy me a minute, figure it out. But once you start to roll in a carry market, it starts to beat you up a little bit.
Value
So
pretty quick.
we try to steer away from those best you can. But market never really gave us a chance to really price stuff on any kind of a weather rally or anything. Volatility's cheap.
Yep.
I was looking at March options and July options here on the close, and a March 420 area was 20 cents. For July 25 was 440. It was around 25 cents.
Okay.
Probably significantly cheaper than what storage is going to be to at least to July
Yeah.
for sure.
You're going to see a lot of mins in that, probably
Yeah.
20 to 25
And,
cents to get you to the first of the year.
It goes back to what I think we even probably talked about in the previous videos, but control what you can control here. I mean, I don't think we necessarily need to go, $1 lower on corn.
Yeah.
But what if South America produces a monster crop this winter and spring, and then,
Right.
or what happens? Or
Political
beans.
environment.
Yeah, geopolitical, got an election. So control what you can control. Put a floor in, go get long a call spread if you choose. Don't have to do it 100%, but it's a good way to be part of your plan.
Yeah.
And at least prevents the market from going lower. You get your money, you don't have the interest cost. It gives you the reason to cheer for higher prices.
Yeah.
and it's an environment we want to be in right now. So
I agree. I think especially on those bushels that you, as an alternative to those storage and DPs. Now, we may very well see basis environments that get very cheap this fall too, if there's some forced cash sales. I mean, I don't want to say that it can't happen. So it's not the only strategy, but even with some basis downside from current,
you can get ahead of that today. You can, go do this today, and
Yep.
if your fear is basis gets
that
extremely
last
cheap.
third maybe of
Right.
harvest, if we got to puke a lot of stuff into the market just
Yeah.
from a space constraint, from a commercial footprint.
Yep. So I think, long calls are probably a good solution. You don't
Agreed.
have to go with 100% or do all March or all July, do a little of everything. It's
Yep.
just, March gives you a good opportunity to see the South American planting, get to see their crop. July obviously gives you a little more window to see what we can kind of do next spring. A lot of things can change. So,
Just to add on to Mark's comment there, and he just spot on with control what you can control. Get control of these new crop bushels, get a flow underneath it. A good lesson we've all learned from 23, 24, waiting for a weather rally. We saw a modest uptick into planting time there back in mid-May. That was it.
Yeah.
Now, obviously the crop's not in the bin, but it's getting rather late here. But going forward, markets are unpredictable. Price is unpredictable. Each year has its own personality. This one had a bearish personality. We don't know what 24, 25 is going to look like. But as Mark said, once you get that call option in place, you get that peace of mind where you do have upside opportunity, where you can have an environment, if you will, where you cheer for higher prices.
Right. Well said. Well, gentlemen, thank you for the time. Viewers, join us for the September 12th next USDA report, and we'll be back here doing the same thing. Thanks.
Welcome to Advanced Trading. Join the community of thousands of subscribers for access to industry-leading risk advisors, insightful research, and engaging live streams. We are your go-to channel for the latest grain market and livestock analysis. Subscribe now.